Let's talk about the fuel that keeps economies burning. And here at Davos, oil has always been a consistent theme. But what about new sources of energy? What about the outlook of fundamental shifts? And can we see an era of triple-digit oil prices again? To answer all that and more, I have a special guest, Dave Sanyal, who's Chief Executive Alternative Energy and the Executive Vice President of BP. Great to have you with NDTV on this very cold Davos morning, Dave. But let me begin with the fact, is there a fundamental shift in oil prices that you're witnessing, that despite a record China demand, we saw those numbers coming in recently, and the fact that Saudi Arabia has cut output and consistently to the highest in 2 years, we still don't see that kind of rise which we previously witnessed?
I think, quite frankly, forecasting the price of oil these days makes the profession of astrology look very respectable. So I'm not going to try and forecast the price of oil. What I will try and do is give you a sense of what are some of the key factors that will influence the price of oil. And what we have seen over the course of the last few months, of course, has been, I would say, historic agreement on the 30th of November with OPEC essentially deciding to cut its production levels from 33.9 million barrels a day to around 32.5 million barrels a day. And the market clearly is reacting to those set of actions which essentially will deal with this excess supply in the market. In effect, what we have seen since 2014, when the price of oil was around $100, and by the way, on this day, literally in 2014, the price of oil was $107. The price of oil today is around $55, and the price of oil in 2007, a decade ago, was also, by the way, $55. So this is a cyclical commodity, and obviously supply and demand have a massive role to play. What we have seen with this oil shock is akin to what happened in the late 80s. In essence, there has been an excess amount of supply, and the way to deal with a shock caused by excess supply is to essentially destruct supply. And that's what OPEC has done. Now we will have to see how that plays out, but the market effectively is reacting to those sets of numbers. So what we have now is a market that is roughly balanced. When I spoke to you last year, in a sense at that time, oil was not balanced. Demand and supply were imbalanced, with supply being in excess. The market today is largely balanced, but we do have record inventory levels, 3 billion barrels in the OECD. So the question really is, how does the agreement hold? And then will we see that washed down in the inventory levels to then re-equilibrate the market sometime in the middle of the year? We shall see. But I think fundamentally, supply is going to play a big role. Now, demand is also important, because we are actually seeing this year, roughly in our forecast, a 1.3 million barrels a day increase in demand, roughly similar to last year. It was 1.9 million barrels a day the year before when the prices came down. So there is elasticity driven by essentially low prices or lower prices.
Right, I'm not going to talk about professional astrology and ask you to predict whether that triple-digit oil price is something that we live in the past with. But to talk about this oil price volatility, are you seeing a sign of stable oil? So a $50 to $60 price range, a band in which oil now comes in and becomes the new comfort level for global economies?
I think it all depends, as it always does, with how the supply dynamics play out, especially in what has been an excess supply driven market. If that plays out the way OPEC is laying out the playbook, and assuming the demand levels continue to be robust. By the way, just to put it in context, the 1.9 billion barrels a day increase in demand in 2015 was the high point over a 10-year period. Last year, with 1.3 million barrels a day, there was a second high water mark, and this year would be the, if you will, the third high water mark if you achieve those levels. So my own sense is that roughly, if those fundamentals play out, with supply sort of being in the OPEC category around 32.5, we do need to talk about shale, because that of course is an unknown, and we'll have to see how robust that industry is. But if demand remains around 1.3 million barrels a day, my estimate would be that, the range that you've laid out is not an unreasonable range. Could that sort of be a bit higher or a bit lower? Of course it could be, but that's not an unreasonable range. I think the triple-digit oil price regime that you refer to, and that was consistent over 3 years between 2011 and 2014 was a function really of this extraordinary demand from China. And that really was the key stimulus, alongside obviously some of the supply-driven challenges post the Arab Spring. Moving forward, it is hard to see another China being replicated. Does that mean there is no growth in industry? Absolutely there is. We are talking about essentially every year a new Turkey or a new Spain in terms of demand sort of being created with, if you will, growing prosperity.
Right, a new business model in that sense as well. But Dave, let me go back to the regions that you are in charge of. You run Europe, look at Asia very closely. Now, what is the kind of messaging coming out from these regions, especially where geopolitics has played such an important role on oil and other alternative sources as well? So whether you have Trumpism and the fact that he wants to end the climate change agreement, focus on US oil output, look at increasing shale output, or the Brexit, what is the fundamental shift to geopolitics and how that impacts our energy forecast?
I think if you look at the industry from the perspective of a microscope, you get sort of drawn into, if you will, the current nuances. One has to look at the microscope, of course, but one also has to look at, if you will, the wider periscope, to look at sort of the wider forces at play. And I think that one of the key forces at play here is when you look at our industry, over the next 20 years, essentially 95% of the growth in demand is coming from the non-OECD. In 1970, 2/3 of the demand was in the OECD. By 2035, so around 20 years from now, in essence, 2/3 of the demand will be from the non-OECD. It's literally a mirror image. So we are seeing some big shifts. The real challenge now is going to be how do we continue to provide security of supply to growing consumers that effectively don't have access to energy. I mean, it is perverse. In the world we live in today, 1 billion people don't have access to things that we all enjoy in the OECD world. And by the way, when you look at the economics and the demographics over the course of the next 20 years, I mean, in a sense, you will see around 3 billion more people who will have a requirement for energy. So there is this big pull in terms of non-OECD. Now, geopolitics will play a role, as it always does, because effectively there is a huge concentration of resources in essentially, in the case of oil and gas, in 4 countries each. And by the way, Iran is one of those in both oil and gas. And obviously in oil you've got Saudi Arabia, in gas you've got Turkmenistan, Qatar, etc. So you've got sort of obviously the geopolitical force at play in terms of supply availability. But what the market is telling you today is that supply is not necessarily the constraint or the impediment. When I joined the industry, the big idea of the day was peak oil, as in peak supply. I would say the big idea today is not peak supply, because essentially that idea has peaked. I think the big idea today is peak demand, and at some point you will see a big shift from what we see today to something else in the future. Will that happen in the short term? I don't believe so. But will there be a long transition over many decades? Absolutely it will.
And I'm on that point of the shift from your traditional oil dependence to alternative sources of energy. What is your assessment? Because this is something that you've been truly passionate about and you head in BP. India's focus on alternative energy, how do you see that in comparison with other countries of a similar nature within developing economies?
I think just to put India in context, when you look at the next 20 years, the growth in energy demand is 136%. I mean, this is the largest growth of any major economy over the next 20 years. And the fundamentals are very obvious. It is because of growing prosperity, because of economic growth, that essentially energy will be required to fuel and power that growth. Now the question really is, moving forward, what kind of energy will essentially win moving forward? My own view is that when you look at the next 20 years, in whichever scenario you look at, oil and gas still remain very fundamental to the energy complex. 50% give or take over the next 20 years. So it remains very, very significant, even in the most aggressive scenario laid out by the IEA in terms of the 450 ppm scenario, to meet the 2 degrees challenge. What I think the challenge for India and other countries is going to be is how does India continue to diversify its energy sources. I believe in this context, the idea that one day you'll see a sunset and one day you'll see a sunrise of the industry in terms of different kinds of energy, I think is probably not right because of the built-in cost of infrastructure. So what you will see are bow waves. And what we have seen effectively is in the 20th century, the age of oil. I think what we're entering into is in the age of gas. And over time that will emerge with new technologies, alternative energies that will become bigger and bigger. When you take a step back, we reckon that over the next 20 years, alternative energies will grow sort of to create a market share around 9%. In the most aggressive scenario, it's 15%. So still very significant growth. In fact, the fastest growth of any kind of energy is going to be from that. But then you've got to look at the base from which it actually develops. That is obviously going to be a lot smaller than oil and gas, and indeed even coal, where we do see a shift taking place. So my own sense is for India, what is really exciting is the gas economy, which I think is going to be a tremendous opportunity in terms of improving air quality and also creating security supply, because India has got a lot of indigenous gas. Complementing that, and I use the word carefully, complementing that is alternative energy. And I think the Prime Minister has laid out the National Solar Mission. I think there's tremendous opportunity for innovation in distributed grids and in other forms of energy. So I think what you will see is, if you will, a track of more gas, more renewables, and greater efficiencies, which I think will be absolutely critical, not only to the issue of climate change, but also actually to things which are more sort of local, air quality, which is becoming more and more important in large mega cities around the world.
One final question. If you have to take away a macro risk which changes all of this, would you say it could be the disruption of US-Iran relations? Could that make the energy market collapse like a house of cards? Or you don't think that the nuclear deal or the fact that there was an agreement with the previous Obama administration changes our own assessment of what is going to happen to the energy market?
I think just given the extent of Iranian production at the current time, don't forget it's below the levels that we saw pre-sanctions quite significantly, at around sort of 3 million barrels a day. Given sort of how big that is, and effectively the fact that to get back to sort of pre-sanctions levels will take some time, I think it's fair to say that Iran is not the game changer in the short to medium term. I think there are other factors, particularly around OPEC in the broader context, that probably is going to be very important. And also, of course, what happens to shale, where we are seeing extraordinary levels of new productivity, efficiency, that is creating a more robust and more nimble industry. So I think factors like that probably in the short term will probably have a bigger role to play in the very narrow context of the oil market. Of course, in the broader geopolitical context, there are other ramifications in the context that you referred to.
It should be an exciting year ahead. Dave Sanyal, many thanks for speaking with NDTV in Davos.
Pleasure. Thank you.